Hi there, so everyone's joined the webinar now. Thanks so much for tuning in. I'm here today with Ian Fitz-Harris, who is our Strategic Development Director at URICA. So today he's going to discuss what is supply chain funding and how can it improve your cash flow. So if any of you are on social media, please do tune in via Twitter. We've got our Twitter handle, which is @Eureka Limited and hashtag Eureka Moment. So we'll go through the webinar next. Ian will discuss everything about supply chain funding, and then we'll finish with a Q&A session afterwards. Okay, thank you very much.
Hello, I'm Ian Fitz-Harris. By way of background, I'm a chartered accountant. I have a specialism in corporate finance. I was director of the Bank of Scotland. I set up URICA Finance, which was the first money raising on the AIM market, which is the junior market for the London Stock Exchange. That was a business that did invoice finance and asset-based lending throughout Europe. It moved to the main market with a market cap of 250 million, and we sold it to the Royal Bank of Scotland within 5 years. That was a great business, but I want to tell you today about something which I think is even more exciting: supply chain funding. It was thought about by a technology guy. His name is Jean-Francois Diaz. He probably is the foremost technology guy in Europe in this space, and after 25 years in this industry, we were discussing a new solution, and he said, you know what, it's easy, and this is how you should do it. And to me, that was a eureka moment, which I'd like to share with you. And really, I think it's the foremost development in working capital funding in the last 75 years in Europe. When people talk about cash flow, they often think about how long it takes to get paid, but actually there's another side to the equation as well, which is what terms do you get paid on? And it's always the small guy who's got the pressure at both ends. Now, our dream was to find a solution that could allow businesses to pay and get paid on the terms that they wanted. So let's take a quick look at what we conventionally see in the market. This is my pictorial of the supply chain. The guy at the bottom is carrying everybody, and bizarrely, the credit flows from the smallest guy up to the biggest. Now, typically the products that have been offered by the banking community have been invoice accounting, but it's a debt product. And all that happens is, as that comes down the supply chain, the pressure ends up on the person at the bottom, and ultimately that stifles growth. At the same time, one of the big developments we've heard many people talking about in government, in the England, in the professions, has been supply chain finance. But supply finance to date has been reserved for investment companies, the large retailers, Tesco, Auchan, Sainsbury, some of the very large manufacturers and the chemical companies, Unilever and others. That product, however, doesn't seem to go very far. It goes from the top company down to the tier 1 company, and really it doesn't filter down to the SME. Our dream has been, can we find a way of funding the integral supply chain? And what I mean by that is, if we look at a supply chain, everybody in business is in a supply chain at some point. And the diagram here shows a typical one, moving from materials, components, assembly, distribution, and then ultimately retail. Now, how can you get the finance going up and down the supply chain perfectly? This is a critical point because, as I say, we're all in a supply chain, and somebody up there is buying goods, and then they're putting their badge on it. And when you put your badge on it, you put your company reputation on it. So you better be sure your supply chain is just what it should be, and it's how you would like it to be. Michiel Stevens, who's probably the foremost thinker in this space, he's professor of supply chain finance at Windesheim University. And the quotes here, he said, the integral trend can be rolled out across sectors as long as the invoice and the status of the invoice is confirmed and is guaranteed for payment. He also said, if we, URICA, could crack this nut, actually it's the holy grail of supply chain finance. We call it supply chain funding, and I'll explain why. So the product funds the entire supply chain. That's the idea. Now, how do we do that? Well, we start with big data. Our big data comes from Euler Hermes. Euler Hermes are the world's largest credit insurer. They were started 100 years ago by many governments and brought together by the Allianz Group to create, as I say, the world's largest credit insurance business. They underwrite 900 billion euros of risk at any point in time, and they have more proprietary data on businesses than any other platform in the world. URICA is integrated with that platform, and that gives us access to a rating on a company's performance within a third of a second. So that was the start point. On top of that, we then looked and said, you know what, if we could put something like Facebook on top of that data, we could create a canvas for people to do business together. And that was really exciting. And I wish I could claim the credit, but as I say, I go back to Jean-Francois Diaz, and that's the modern way the tech companies will design the future, not the corporate finance guys. So let's give you a quick overview of it. Yeah, it funds the entire supply chain across multiple tiers. It enables businesses to take back control of their cash flow, and we've all had those moments. Anybody who's run a business has had that moment where we've got the next big order, but how do we fund it? And we need to purchase the goods, but the supplier won't supply because we're not able to give him the information to get the credit. And that can be the biggest conundrum in business. Secondly, how do we release 100% cash without the need for debt, debentures and personal guarantees? Again, we've all been there. You get the big order and all of a sudden you say, right, I better go and talk to the bank, and then you get into a 3-month process, and by that time you've lost the order. But not only that, you may have to give away your company, your house, and your left kidney just to get the business going. With this product, you don't need to. There are no long-term contracts. You can do it invoice by invoice. It removes all of the risk, and that's a critical point. Businesses very often get excited by the order, they get into a contract, they start funding it, and then it all goes wrong. And that risk is not something that we often think about as we go in. Yeah, I know this guy, I've dealt with him, he's going to be fine. That isn't good enough in today's, the market can change very, very quickly, and that gets even more difficult as you cross geographic borders. So it allows you risk-free growth without debt. That's another thing. It's a little bit like if I sell to my very large customer and he says, you know what, I normally take 30, 40 days, but if you take a small haircut on the price, then I'm happy to pay you the same week, the same day. And that is where we were trying to get to. If everybody paid early, there would be no need to borrow from the banks. That was the start point of URICA. There's no recourse. So if you say you've sold it and the customer says they've bought it and they're happy with it, then that's enough. And if it all goes wrong, it's URICA's problem. And we work, as I say, with Euler Hermes, who are writing this 900 billion euros, and we underwrite the total risk. Now that is something that people forget about in funding. When you look at your cost of capital, it's important to understand the risk-weighted cost of capital, and particularly when you go into new markets. For the buyer, it means that you can extend credit. And we see this a lot around the globe today. I know we have the payment directive in Europe, and everybody says it should be 60 days. 60 days is actually quite a long time. But in fact, companies can just jump out of that contract and take 90 days as well. Or if you're supplying into Asia, you might find there's a need for 120 days. So how do you win the export contract? How do you win the export contract when you're competing with a local supplier, and the local supplier will give 60 days because they know what the risk is, and you don't know what the risk is, so you need cash and your bank won't fund you? This will allow you to get extended credit, to offer extended credit, and to buy with extended credit. And the last bit, and probably the most important bit in the new sort of tech world, is this is fast. Nobody wants to go through a credit process that lasts 3 months, needs 5 meetings, gets very painful. Nobody wants to do that. I've got an order, I want to do business. And today, you know, the funny thing is, people tell me the French will queue up for 15 minutes to buy a baguette on a Sunday, but nobody wants to wait 5 seconds to have a credit decision. Let's give you a quick overview of how it works. So we look at the two sides of the supply chain. We look at the sell side, and we also look at the buy side. And we call the sell side URICA or URICA export if you're trading across border. And you can go in both directions, but let's start going on the sell side. If I'm a supplier, I raise my invoice through URICA, which is great because it means my customer gets the paperwork, it goes to the correct person, I know that person's got it, and the invoice is delivered, and it's delivered instantaneously. The URICA platform gives suppliers an instant answer on eligibility of each invoice. So when you put the customer on, and you put the invoice on, within 1/3 of a second, we will underwrite that and say to you, you know what, if you want paid cash, then it's going to cost you 1% discount, and you're paid cash. But not only are you paid cash, you have no risk anymore, and no risk and no debt, which is going to improve the rating of your business. That's critical. The customer will get the invoice, and you know he's got it. And they then have 3 options. They can say, look, this is absolutely fine, or they can say, you know what, I think it's slightly wrong, and immediately you can open up a chat portal and you'll get that response and you'll sort that out. What we've seen for so many years is, yeah, you send an invoice, and on day 60 the customer then disputes it, and then you're waiting till day 90 for your money, and we all know that's a bit of a game. But with the platform, that will be resolved, and any disputes will be removed immediately, and everything is signed with a one-time digital signature online. The terms and conditions are there. They're 2 pages. They're written in very simple language that businessmen understand, not legalese, and immediately executed. And it's invoice by invoice. You're not tied in. You do it when you want to. Once the customer has said, yeah, I agree with all of that, then the supplier is paid 100% of the invoice, less a small haircut, a small fee for using the platform, for having the funding, for having all the credit underwriting and the risk removed, and importantly, for when you're trading across borders in different currencies, we also hedge out all the forex risk. And if you were to break that up into separate fees and start adding it up, you would find that actually it's very, very cheap. And it's a perfect product where all of these things insurance, underwriting, cash, and forex are working symbiotically and not out of sync. The cash back step is actually it's the same contract, it just starts in a different direction. So I'm a company and I've got a track record. I don't have to be huge. I could be, you know, a company with a couple of million turnover. I could be a company with 250 million turnover. If I have a track record in business of paying my bills when I say I'll pay them, and operating in a steady way, then I will get a rating, and I will get a rating from Euler Hermes, and I know what that rating is within a third of a second. And on the basis of that, we can underwrite transactions. There is no security. It really is about track record. So I'm buying, and I want to buy well. I care about my supply chain because I know that I'm going to put my badge on the product, and their product is part of my product. So my supply chain is really important. I get the corporate social responsibility bit, and I want to make sure that the supplier that I go to says, you know what, I'm going to give that person the best service because they pay me cash and they look after me and I'm a preferred supplier. With this scheme, it's very simple. You register with URICA. It's like signing up to Facebook. We allocate you a credit wallet. And so we may say, look, here's a couple of £1 million. You can use this to pay all your suppliers early when they submit their invoice. The supplier puts the invoice on, and I, as the customer, say, you know, that's absolutely fine. The supplier's paid. I can probably negotiate some better terms out of that. But the glue is there in my supply chain to deliver the best manufactured product, the best service, the best construction. And to me, that's a revolution in terms of supply chains. And supply chains in a challenged economy, which is doing well, but faces Brexit issues, faces all sorts of different challenges across the world. We've got to export, we've got to import well to be able to export. Then this is really a major, major step. And for me, it was the Eureka moment. Let me talk through some real life examples, and I don't know whether Stuart's dialed in today. I see quite a few people are, but Stuart, I guess, is our poster boy, and I love his business. Stuart was one of the first people to use URICA. He bought Norton, and he bought it. It was owned by a US company, and yet it's a British bike. And it won the first ever Isle of Man TT. And he decided he wanted to bring it back to the UK and build British bikes. And Lord Digby Jones, who's on our board, is chairman of Triumph, and if he's dialed in today, what I can tell you is that Triumph is 80% made outside the UK. Norton is 80% built inside the UK. But Stuart needed a supply chain to build really the top bike. But the parts he builds or are built for him, they're all bespoke. You can't sell these parts to a Suzuki or Honda or anybody else. They're all made to a perfected design. And his suppliers were relatively smaller engineering companies, 5, 6, 7 million turnover businesses in Derbyshire. And they all said, Stuart, we're part of your dream, but you're going to have to pay us quickly because we've got some risk. You know, if you don't and we're stuck with parts, then that's a problem. And so we got together with Norton and we gave him a credit envelope and we said, there you go, that's the way to stimulate your supply chain. And he got the suppliers and he got the attention and he got the best build. And at the same time, we were able to help him on the export side, so he got paid quickly. And when you look at the whole situation, we removed debt from the whole of the Norton supply chain, from the first bolt being cut in a Derbyshire factory to somebody riding a Norton which has now a 3-year order book, somebody riding a Norton off down Venice Beach, and the whole debt thing was removed. This one is a really exciting business. It's the EcoSpin business. It's the sort of Tesla of the UK. It's an electronic vehicle used overseas a lot. They had a very large order in the US, particularly for the police force and so on. And as you can see, every politician wants to jump on the glory. But it's a really exciting business. And funnily enough, Tesla got huge help and huge handouts from the US government. And EcoSpin will tell you their own story about the support they got in the UK. They needed to export. And we gave them a product where they ship, they get paid cash. They've got no risk, they've got no forex risk, and they've got their liquidity to grow. This is one of my favorites. Laura Gregory and her partner Robert Hammond run a business called Great Guns. It's one of the most exciting businesses in the creative industry. She's won many awards all around the globe, and she produces some of the coolest ads on the planet. This one is L'Oreal, and it's L'Oreal into China. And Laura phoned up and said, Ian, I've got the deal for China. It's 600,000 US dollars into Shanghai, and I don't know how to fund it. And it's in stages. There are stage payments right through the whole thing. The banks don't know what to do. She phoned on a Thursday. It was funded Tuesday morning. And she has probably the most exciting production business out there. The last one is construction, and this I find really exciting. I'm going to tell you in a minute about the supply chain finance index, which is something we look at very carefully, but construction has the worst supply chain out of any industry in the UK. And we all, if you're in construction, we all know the games. We all know that QS takes time. We all know that and we all know that the tier 3 supplier walks off site because he works for himself and he hasn't been paid, and then all the problems ricochet right back to the top of the supply chain. This is a company which is a very exciting business, speciality working in high voltage construction and engineering environments, growing very rapidly. Its supply chain is critical. And they introduced the supply chain charter, and they said you must be green, you must employ local people, and you must use URICA, because we want to know that every single tier of our supply chain is paid on time. And at the same time, because they pay on time, because they're the cash payer, all of their suppliers are able to give them a better price. A better price because they've got less risk in their business, they've got certainty of payment, and they don't sit there. The small subcontractor is not sitting there at 11 o'clock at his kitchen table trying to work out the numbers and how he's going to pay the salaries. This is a major step forward for the construction sector. This illustrates how it works down multiple tiers. As I told you right at the start, the vertical supply chain probably gets to tier 1. This works like Facebook. You can go on, you can rate a business, and you can go right down the supply chain, but you can cross over supply chains. I might be a manufacturer, but actually I buy from creative people and I sell to others in defense and and this will allow you to touch every part of the supply chain. So how do you choose alternative finance? What are the things you should be thinking about? Is the security and collateral required? We all know what that means today. Well, with this it's not. It's completely unsecured. It's about your track record. If you've earned your track record, why shouldn't you benefit from it? Is it a debt product? No, it isn't. You're paid cash, or you're able to keep your trade creditors a little longer and get trade credit. There is no debt in this type of funding. Who will be collecting the money from my customer? Yeah, we've all heard about factoring. That's what happens there. The factor gets in between the customer and the supplier, and that's a total disaster. It was a great product 75 years ago, but today it's finished. With this, you are given a canvas, and you work on that canvas in collaboration with your customers and suppliers, and it's up to you. You agree the terms. You put down, that's what I agree, why won't anybody pay? That's our experience. It happens because everybody's getting what they want. Will I need to repay if my customer doesn't pay? Well, no, you won't. That is entirely the product of the platform. If it goes wrong, then it's underwritten. How much money can I get paid early if I use invoice finance solution? Well, invoice finance solutions are the typical invoice discounting, confidential invoice discounting, bulk discounting. You can call it many different things. And the promise with those is 75 to 80%. The reality is 40 to 50%, depending on which industry you're in. With this, you're going to get close to 100% less the one-time discount, and you'll be certain of that. And the supply chain index. The URL address is there. Please have a look. It's great. It was conducted by YouGov. It's totally independent. It was commented on by a foremost economist in the UK, and it gives some really interesting trends. And the big trend is that actually supply chains are getting more and more strained. Some of that's to do with Brexit, some of that's got to do with the pound, and a lack of accessible finance. And the trend is down. And the trend showed us that businesses expected more than 33% failure in their supply chain, and it was accelerating downwards. And if it goes down any further, it could hit 45%. Now, who would go into business with the possibility that one of its suppliers might go wrong, and a 45% possibility it could go wrong and you lose all your profit? That's critical. That's critical, and it's a problem we need to get on top of. So thanks. Now, some questions. And we've got quite a few coming in, which is exciting. So the first question, what makes your service different from what I can get at the banks? It's a black and white question, really. The banks have been peddling old products for a long time. I mean, we all need banks. We know that. But technology has moved at a pace in many, many industries, but not banking. What you tend to see is some nice portals, some nice introduction, but does the technology change the product? If it doesn't, then essentially what we're seeing is lipstick on the pig, and this is, for me, the first technological development in this space in 75 years. Okay, the next one that's coming is, can you work abroad? If so, where? We work with Euler Hermes, as I've explained, the world's largest credit insurer. They underwrite 900 billion euros in more than 50 countries around the world, and they have the most sophisticated rating database out there with detail on 40 million companies. So we can work in many, many parts of the world, certainly all the major markets that you'll be looking for. How easy is it to start? That's a great question, and one that I love about this, because I've seen, working in corporate finance in the past, that it takes weeks and weeks to put a finance facility in place. It's painful, it's disruptive, and sometimes it goes wrong and the negotiation happens at the end. With this, you can sign up online, as you would with Facebook. It'll take a few minutes. You'll get all the detail. You can get the ratings on your business partners, whether they be suppliers or customers. You're able to enter all of that with modern technology that actually will self-populate all the fields. Of course, there's a little bit of paperwork. I say paperwork, it's online, but it's money laundering and know your customer, and unfortunately that's the world that we all live in, so it may take 24 hours at the most, but if you phone us up and say, listen, I need to do this really quickly, we could probably get it done in a couple of hours for you. After that, it's a third of a second. How much does it cost? It's a critical one, and typically for early payment of 30 days, we're going to be looking for 1.25%, something like that. It depends which market you're in, but that's it. It's 1.25%, and that doesn't matter, you know, which market you're going into. The important thing to me is, if you're really smart, it won't cost you anything, because if you use it down your supply chain, you're likely to buy better and gain efficiencies. If you price it in when you're making your quote, and many businessmen I speak to, they know their cost of time and materials, but they don't know their cost of capital, and they don't know their risk-weighted cost of capital. Our platform, URICA, will give you that. You can go in, you can say, this is the company, this is the transaction, this is how long it's going to take, and it'll give you a price. And that's it. So for me, it's a price worth paying. Thanks for everyone for dialing in, and please feel free to send any further questions that you've got across, and if you want to chat it through with anybody, we'd be absolutely delighted, and we'd be more than delighted if you told your friends and connections about it. Our aim is to grow this like Facebook.